Good afternoon.
Second, the committee kept the target for the federal funds rate at 0 to 1/4% and reaffirmed its expectation that a highly accommodative stance of monetary policy will remain appropriate for a considerable time after the asset purchase program ends and the economic recovery strengthens. In particular, we anticipate that this exceptionally low range for the funds rate will be appropriate at least as long as the unemployment rate remains above 6.5%, considerable time after the asset purchase program ends and the economic recovery strengthens. In particular, spending by households and businesses has continued to expand, and the housing sector has seen further gains. The jobs market has also shown signs of improvement over the past 6 months or so. Private payrolls are growing more quickly, total hours of work have increased, the rate of filings of new claims for unemployment insurance has fallen, and the unemployment rate has continued to tick down. However, at 7.7%, the unemployment rate remains elevated. Policy, such as potential effects on financial stability, which are hard to... In sum, the committee anticipates moderate economic growth supported by household and business spending and a strengthening housing sector. The labor market has shown signs of improvement in recent months, but the unemployment rate remains elevated. Inflation is expected to remain low, and fiscal policy has become somewhat more restrictive. In light of its outlook and following a review of the efficacy and costs of additional asset purchases, the committee today reaffirmed its asset purchase program and its federal funds guidance. There's the need for policies that will support progress towards maximum employment in a context of price stability. We've seen improvement in the last 4 or 5 months. The last 5 months, for example, we've seen over 200,000 jobs a month in the private sector. Unemployment rates come down 0.4 since September. Unemployment claims, insurance claims are at the lowest level they've been since the crisis. So we are seeing improvement. I think one thing we would need is to make sure that this is not a temporary improvement. Flow of purchases respond in a more continuous or sensitive way to changes in the outlook. So as we make